How we doing, traders? Good morning and welcome investors to Pre-Market Prep. I'm excited to get another morning started with you guys out there. Give us a thumbs on up, hit the subscribe button down below. We got a lot to talk about the retail disaster out there. We'll talk about Walmart, of course, doing some pre-announcements, earnings. We got Nxpi, UPS, General Motors, McDonald's, General Electric, Coca-Cola, and we got, of course, our special guest, Ivan Feinseth, partner and CIO of Tigress Financial Partners. I'm excited to jump on into it. Let's get the morning started with none other than Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. Let's get it started. Let's bring on Joel Elconin and Dennis Dick, and let's talk about the overnight disaster that happened in retail. But first, how did those futures look, Joel?
Triple D and I had the same reaction. We're down 15, but what's holding us up? Down 15 and a quarter, handles 54.75. We'll get into that in a second. Crude going back towards triple digits, up $1.79, 98.49. Gold down 3, 17.16. Silver up a couple pennies, 18.37. Bitcoin, can't hold a rally, down 8.20, 21,065. Ethereum futures are in the red too. A little bit more on a percentage basis, down 98.50 at 1397.50. And Triple D, we got the energy up here, but we have an absolute retail disaster.
Yes,
and
we do.
S&Ps really don't care.
The only reason the S&Ps don't care is that retail is just not as big a part of the S&P as it used to be. The S&P is basically a tech index now. So, and tech is down, but obviously this is Walmart. But as much as a little, and obviously retail isn't as big as part of the S&P, so maybe the S&Ps don't care very much. The Walmart scenario is a huge part of the overall economy, though.
Huge.
It's a tell here, and it's telling you that this earnings season could even get uglier. I mean, here I am last night trading Okay, we got Nxpi earnings. We're trading a little bit of tech stocks, doing a little thing, and then all of a sudden, my filters, my scanners just light up. Boom, Walmart, Target, Costco, Amazon. I'm like, what? I'm like, holy, whoa. And then I've got another trader there, at Bright Trading. He's like, Walmart warned. I'm like, oh my gosh.
Uh-oh.
I'm like, just looking at the retail stocks just getting hammered. And Dennis. Just hammered. And it didn't stop.
You didn't hear? There was a call out on the loudspeaker. It was like, over, clean up on the retail aisle. Walmart needs a cleanup.
And it still needs a cleanup here, Mitch. This is not pretty. And I mean, this is retail apocalypse day because you got Walmart down 9.27%, Amazon down 3.5%, Costco direct hit down 2.8%. You've got Target, obviously the most direct peer, which everybody pairs trades, and they've already said stuff, warnings twice before. Well, they're getting in the Walmart warning now, down 5.2%. Take it over to the apparel. You got, the department stores, Kohl's down 5%, Nordstrom down 4.38%. You got Macy's down 4.7%. You got serious pain in the retail sector. XRT, you want to bring that one up, down 3.84%. Give you a better feel for, what's happening in the retail world. Because you come in and Nxpi, you're like, we're down a little bit, but not telling near the story when you start looking under the hood.
You know what kind of caught people off guard too is, and we were discussing this on At the Close show, that was a pretty mysterious rally at the end of the day yesterday, right? At 3:15, we were on the lows of the session. We were knocking on the door, right, of Friday's low, because I'm really keen on that to see if if this was just the official dead cat bounce here in a major bear market, and we rally 30 handles, and then they tacked on like another 4 or 5, and I'm like,
Yeah.
wow. I'm like, I'm just getting ready to do, look at my levels for tomorrow or for today, and all of a sudden it's like, wham! It was quick, man. Do you have time to cancel any bid? Did you get
That's
picked
all
off
you're
on that?
doing is when you have something and you're not prepared for. It's one thing, okay, well, a company warns, but you're prepared for it. But this Walmart wasn't even on the schedule for what, another 5 weeks, Mitch? Like we're talking a month. Their earnings were a month away. So this is just out of the blue. So you've got to go into damage control if you're sitting there playing any type of market making role. But just making sure you're not getting hit. I know I had another, trader up right that was long Walmart going into that. So then you're just like, what do? He eats it. You're selling it. You're trying to limit the damage as much as you can.
Yeah.
I had some bids out there on not Walmart, but I had them on some retail stocks. And I'm like, first thing you do is you cancel all your bids and get the hell out of there. And then I turned around and S&P, well, I hadn't even, it was very delayed. Like to the tune of like, okay, I've got my bids out of there. This is 20, 30 seconds probably after the warning. The S&P hasn't even started selling off yet. So I don't know what the hell it was thinking. So I hammered a bunch of SPY, which I made quite a bit of money on, obviously, because then the SPY came in 10. We were trading up 3 points on the futures when that warning happened. And now you're down 13, 14. So it came in. I'm actually surprised SPY is not down further, though, to your point, Joel. But let's take it back to the actual headlines here, Mitch. That broke.
Got you. Let's go ahead. Let's jump on in
show
here.
it. If you can show it, the Walmart. This is what everybody's going to be talking about all day, so we might as well show it.
All right. So Walmart lowered its profit outlook for Q2 and full year 2023. The company said that its operating margin is now expected to be 4.2% in Q2 and 3.8% to 3.9% for the full year of 2023. The guidance was cut preliminarily due to pricing actions aimed to improve inventory levels at Walmart and Sam's Club in the U.S. and mix of sales, said Walmart in a statement. They also said that comparable sales for Walmart in U.S. excluding fuel are expected to be about 6% in Q2, and Walmart expects Q2 adjusted EPS to decline 8 to 9%. All things that, on the downside and pre-announcements. We've talked about how this has affected earnings beforehand, how we were going to look to see if we got pre-announcements coming in, and Walmart definitely shaking up retail. This is also coming off the heels of a good retail report that we got just a few weeks, like a weekend ago. And so I think that a lot of people had saw that retail report. We're looking at these stocks, playing them to the bull side, and this definitely knocking the whole industry down.
Yeah. And when you get the biggest player, you could say maybe Amazon and retail, but the biggest one with physical stores, Walmart, coming out with a warning like this. And somebody's saying in the chat, and I believe they're correct, because I think Courtney Reagan said last night on CNBC as well, it's the first intra-quarter warning, like not on the print from Walmart in 8.5 years. It's been a long time since we've seen something like this happening. Like retail isn't even on my radar. They're the end of earnings season. We're still in the beginning of earnings season. So all of a sudden you look here and all of these retail stocks are now getting priced like recession imminent. And that's what they're doing. It's a repricing of risk in retail here. Target right down, and giving back half of the gains from the last couple of weeks. Walmart instantly giving back all of the gains from the last month and a half. This is going to hit the retail sector, but I think it has repercussions for the overall market as well. But, just taking the fallout even farther here. I mean, yeah, you think about Amazon, Target, Costco, Macy's are the obvious ones. You got the dollar stores, Dollar General down $10.
Mm-hmm.
You got Dollar Tree down $7. You go in the online, because they took it to the online retailers too. You got Chewy trading down 5% here this morning. Obviously they hit Amazon, which is why the Qs, are getting hit here as well. I mean, there is just a lot of fallout from this to think about. And even, at the time, like Home Depot trade down $7 because their fallout is over into retail. Lowe's, I mean, they're hitting everything, it seems like here, like at least anything, to do with retail in any form.
Ooh.
CVS, they were hitting even Procter Gamble.
Even smaller names like American Eagle. I mean,
they're getting Gap,
even apparel, apparel's getting hit on this
hard. AEO, to your point, down 7% here this morning. They didn't even say anything. They're down 8%. They didn't say anything. This is just on Walmart. They're almost down as much as Walmart. They didn't even say anything, the poor company. Gap down 5.65%. I mean, so, what does this mean here? Joel, I'm going to throw it to you here. You've been quiet in the background. What does this mean for the overall market? Because the S&Ps seem to be shrugging it off so far. I mean, down 13 points. We were down 13 points on, like on a nothing headline, just on normal market action. Now you get retail apocalypse happening, yet the S&P says, well, we're comfy here. We're comfy here. I don't get it. I would think if you would have told me yesterday that Walmart's going to warn fall 10% and there's going to be half the retail stocks down 5% plus, that the S&Ps would be down 30, 40 handles, not 13. So resilience here. Does that mean that, they're just slow, or does that mean they're going to buy other stocks?
Well, first of all, with the indexing, they have to buy other stocks, right?
They do.
Just to keep it in balance.
Yes.
You didn't even go into the suppliers to Walmart, your General Mills and your Smuckers, so we won't go into that. I think the market's just being hopeful, and I think that big tech, that this is going to be specific to retail, and that your big guns, and you made an excellent point about where, when you did the exercise of where to try and find Walmart. Well, Walmart's less than 1.5% of the S&P, and look at the big components: Apple, Microsoft, Google, Amazon, Tesla. Right there. It's all about the tech. We're getting back to that mode we were in, where the market was just focusing on the big guns, right? And the big guns were leading us higher while everything else was falling apart. And then when the big guns fell apart, then the market fell apart as well. So, technically, I thought I'm looking at Friday's low in the S&P / Spider. I thought they were going to get there yesterday, late in the session. Nope, they turned around and rallied it. We were theorizing last night, you thought you might see the 40-50 handle whoosh today, or, overnight, where they come in and jack them. And my old bones I just didn't see that because of what you have coming up. You still got a Fed meeting. You still got GDP coming out. You still have, earnings. This is the way this market is. If you get great earnings out of a couple of big tech, they're like, who worries about Walmart? Who worries about Walmart? Maybe, and the other thing the market's thinking is, okay, they're not spending money at Walmart, but they're spending money somewhere else. I don't know where that somewhere else is, but that's where I want to be invested.
They're still hopeful market. That, and again, to your point, Joel, Walmart only 0.55% of the S&P, so it's a very small portion of it, even despite being such a big portion of the economy. But they're hopeful that, okay, it's S&Ps will be fine as long as tech is fine. So they're hopeful that, tech has a low enough bar. Tesla's earnings were okay. Netflix earnings, which weren't great, but was bought anyways. Micron lowered guidance, but they bought that anyways. They're like, as long as we get through Google and Microsoft and Apple and Amazon unscathed, this market can continue higher. If one of those four companies pulls a Walmart and warns here, Katie bar the door, it's not going to be like today. So that's why I'm scared. And I'll
take those odds. 1 out of the 4 versus 4 out of the 4 being in
more out of the 4, Mitch.
I'm sorry, man. I'm sorry, man, but I'm all about probability. What you're pretty much telling me is the probability is pointing to the downside.
If one of the big 4 warns significantly, I think there's a significant probability that we're going to have a significant sell.
Line them up. That's all I got to say.
So I sold my Microsoft a couple months ago because I was worried, about, and obviously, that was a good sale. I sold a piece of my Apple. I've entirely hedged my Apple position now. So going into this report, I've never do that, but I'm very nervous, and I've hedged the entire Apple long-term position. Bought Apple like a decade ago. Maybe not that long, 7-8 years ago. Average cost basis is $25. I just hedged it. So, hedging it, and I don't know if I'm going to release the hedge or not, but right now it's completely hedged with calls and the puts. And, because it's had a good rally. And I look at it, it's 24 times earnings. It's not cheap. Don't kid yourself. You can't look, it's 180, it's 150, it's cheap. It's not cheap. Apple's one of the most expensive it's ever been. So they've got to price, if they come in and warn, they'll get hit. So maybe it's going to be a good quarter for Apple. Maybe everybody's still buying iPhones. Maybe everybody's still, but I'm just scared that it's not going to be. And it's had a nice run. I mean, we went from 130 to 150 in the last month. That's a nice comeback. That's a nice little quiet, almost 20 points on a $130 stock. You're talking about what? A 16% rally, if I'm doing my hair math correct there, Joel. 15.
Yep.
It's been a good comeback. It's got, and if you think about 50% retracements, which we like too, you think about the 180 down to the 130, it takes you to like 155. Well, that's where we stalled out. I mean, this is trading technical here. So now I don't want to go into the print long. So I'm nervous about that. I stayed long my Google and my Amazon. Google I've had forever and ever and ever. I thought about hedging it and I didn't. Maybe I picked the wrong one, but Google's a little bit lower P too. Amazon is in my wife's RSP, which is like an IRA. It's a new position. We are up in it slightly. Obviously I sold it up at 3,200 when everybody told me not to sell it. And then I've rebought half of the position down here, I think around 110, which is 2,200. So I scalped myself 1,000 points by getting it out. So don't ever tell, they say, oh yeah, you sell it, you'll never get it back cheaper. Sometimes you will. So basically bottom line is this Walmart print makes me more scared about this big tech earnings because I don't think it's just retail. And I don't think if retail's hurting, well, Apple's retail too, Joel. I mean, people are buying stuff too. I mean, you can't just like say, okay, well, they're going to keep buying. They're going to buy technology, but they're not buying other things. So it's nerve-wracking to a certain extent to go into this earnings season. And I've been bullish, for the last couple of weeks. But I feel like if you're sitting on those swing trade profits, I don't want to go through the prints because I think the news isn't going to be that great. And secondly, I think we've had a pretty good run here and hedging may be prudent right now.
Sean made a good point yesterday with Apple regarding, the iPhone cycle too, right? And they're, and historically it's been, lower ahead of a new iPhone cycle. So they're not going to, that would be something where, you're looking for a bad print this quarter. And then as they ramp up into the next iPhone cycle, maybe catch it, on the rebound. But this Walmart chart, like I'm looking at this thing and it's not bouncing. I mean, you can, it's off the low. The low was made at like 118.77. That's not the low
which
of the
is right
move.
to your levels, Joel. I mean, 117, 118 is the May
I
and June
know.
lows. So it's
It's
not
just-
surprising that's where it's bouncing.
Yeah.
Trying to bounce.
Will people step up there today? I don't know. I think last time, I don't know if it was Walmart or Target, I was looking for a bounce. Today, people got burned, buying the dip, right? And it took a while to recover, right. But now it's right back down there. I'd say you got to keep an eye on this. I'll give it a range because you had so many lows in this area. But if these guys give up here, like if a couple of institutions just say, okay, I'm done with Walmart here, and we're getting out today, and we're not worried about it anymore, then you can see the same 115, 116. They bought the dip before. I just don't know if it's going to happen. And also, they said 2023. I mean, they're not sugarcoating this at all. They said
exactly
Q2, Q3, and next year. So
no reason to buy it.
Yeah, the big thing that I'm noticing too is that a little bit of what these companies are telling me is that the demand destruction that's out there is going to be affecting their future earnings also. So that's what we need to keep in mind too, right? How are future earnings being affected by what's going on in the current environment? One chart that scares me tonight is Google. That just scares me. If there's one chart that at least technically looks really bearish to me,
I agree.
It does not look pretty.
Yeah, it doesn't. It looks like it's ready to fall off a cliff. I'm long Google. I've been long Google. I think I bought it back in 2009 or 2010. I've been long it for 12 years. My average cost basis, I haven't even looked, but it was $250, and then they did what, 20 for one. So I don't know, is it $12? My average cost basis on this thing now, I think, on the 100. So I'm not going to sell it. Did I want to hedge it? I thought about hedging it through the print. And the way you do that obviously is you just, you can buy puts and calls, and you take it through the print. And then if it goes down, you take the profits on those. If it goes up, then you take the loss on those. I thought about hedging this one through the print too, but I'm like, nah, I'm gonna, I can't sell everything. You're not gonna hedge everything. So I mean, you can if you're a trader. As a trader, I wouldn't hold this through the print whatsoever. But you're looking at your long-term retirement account, and I'm thinking, is Google going away? Are we just gonna stop search? Are they? I still think it's gonna be a big part of the economy for a long, long time. So I'm trying to like separate the trader from the investor. The trader in me is with you, Mitch, saying this looks heavy. I wouldn't want to own it as a trade through the print, but I've had it for so long, I'm going to take it through as an investment through the print.
You know what's gonna be looking for in the Google print, and what's been holding it up. I can't really say it's been holding it up since it peaked over 150 and now it's at 108. But if you get any kind of slowdown in the YouTube revenues, which have just been gangbusters, then because the ads seem to be going down from what we're seeing.
Yep.
YouTube holding up. I mean, if that to me, that's what's keeping it above $100. So we'll see. You're right. Chart looks heavy. It got Snapchatted on Friday.
Yeah.
Advertising. I mean, people aren't
That lowers
buying
the
as
bar,
much
though.
stuff.
That helps to lower the bar a little bit. Like the Google and the Meta sell, especially with Meta, and we're going to hear from Meta Wednesday. But especially with Meta, like the bar just got lowered significantly here from Meta.
Meta told you that they're not going to monetize the metaverse until 2030, Dennis.
Well, that's something to think about too. Yes.
Yeah. I mean,
but there is other businesses here too, and then they're getting sued now. Did you see that? They're getting sued because somebody else had the Meta name. Another metaverse company had the Meta name. Zuckerberg just went, well, a small company would just take it anyways. I was like, So I don't know. There's a lawsuit now thrown at them for the name. Be bad if they had to change the name. Obviously, they're probably going to pay them off and just make them go away. But I mean, be bad if they had to change their name.
All right, let's get out of here. Let's get into the earnings. We got a lot to talk about in there. That's the retail disaster, and if anybody can clean up the retail aisle, please let us know. Let's move forward. Let's get to Nxpi here. Semiconductor reporting after the bell yesterday. Q2 adjusted EPS beating here at $3.52, beating the $3.35 estimate. Sales were at $3.31 billion, beating the $3.27 billion estimate. Nxpi Semiconductor sees Q3 sales at $3.35 billion to a high end of 3.5 versus 3.3 billion estimate.
They were buying this stock up, and then I honestly think like it was trading higher, and then Walmart came out, and
it got Walmart
market traded, and they're like, well, we got to sell that too. That's pretty much what happened. NXPI absolutely nothing to do with Walmart, but it got Walmarted because it was getting bought. Report was fine, and then they're like, no, we don't buy stocks on days that Walmart's falling 9-10%. So they turned around and it's been down since. So this could be a sneaky one because this actually, if for whatever reason the S&Ps hold up, I think it's this kind of stock that could actually get bought here. Not much to do with Walmart, and it sold off. Don't kid yourself, $5-6 when that Walmart news hit the tape. Everything was selling off. I mean, they got silly. They were hitting other stocks too. They just started hammering bids wherever the hell they could. And I was seeing, some stocks just trade ridiculously too low. But, Nxpi reported a pretty good quarter. It was trading higher. Then boom, Walmart pulled the rug out from under it.
You had me cautious on this one yesterday going into the print just because, 140, no, 180 in a month, right? So if you're going long, if you're staying long into the print here, you're going to be looking to me. I mean, I would have 180 was just a charm there. I know it only got to 178.
Kissed it again 2 days.
Yeah,
perfect.
Missed it by a couple bucks. This is a tough chart because you've had such a nice rally. I mean, you want to buy the dip in here after a 40-point rally. You want to buy it down, $7.5. Well, maybe you can lean on 168.28. That's your 4-day low. That's $4 away. Didn't quite get there in the pre-market. Got to 169. So I feel okay that, until it breached that level. But if it breached that level, 165, 160? So, you got your line in the sand here. Not a bad report. You might even see the close again. I think that the real tell from this one, if they try and rally this off the open, if you can clear that close at 74.13, then, I think you can take out yesterday's high. High close to the rebound, right up there at 179.95 as well.
The ETF effects are going to, right now, if the S&P stay where they are, and there's just so much apocalypse even in retail, the ETF effects here are going to probably put a bid into tech ahead of it, which is completely nuts, but this is the way it works. I trade this stuff. So I would not be surprised if, one of the only major tech companies reported last night reported okay earnings actually does turn around and get bought a little bit on this. So I'd be cautious coming in here and just shorting tech right now on this Walmart news, because the Walmart news is significant. It's knocked down so much. You start adding up the other stuff. The 13-point sell-off that we're seeing is pretty much all retail on the S&P. So then you got to think the other stuff's got to make up 13 points. So what are they going to buy? Oil, is that going to make it all up today? Oil's trading higher. It's going to help. But I wouldn't, and banks are not helping here today because the TLT is ripping. So I honestly think I wouldn't be surprised if they actually did buy some tech stocks today. Not saying long term I'm coming in buying tech because of this Walmart sell-off. But I'm just saying if you're a day trader, talking to the day traders out there, I'd be cautious shorting tech at the open here. I wouldn't be surprised if you get a little lift after the open, because one of two things are going to happen. The S&Ps are going to start to leak more, which very well might happen, or they're going to start to buy a couple other sectors to make up the difference. And I think the highly likely sector might be tech.
Also could be some bull traps because of that right out the gate. So we'll see what happens there.
Yeah, for sure. Look out for bull traps. I mean, we're still in a bear market, and it could all be bull traps. So.
That's the truth. Let's keep going. We got a lot of earnings to talk about. We'll get out of Nxpi here. We'll go to UPS. UPS Q2 EPS coming in here at $3.29, beating the $3.16 estimate. Sales were at $24.8 billion, beating the $24.62 billion estimate. They reaffirmed full year 2022 revenue guidance of $102 billion and raised targeted share repurchase to $3 billion for 2022.
I mean, FedEx, remember when they announced there, and I guess that was maybe the prior quarter because that was over a month ago, but, stock ripped on that. So the bar set a little bit higher maybe because of that. UPS, was pretty decent report, to be honest. Again, maybe it's just overall market sentiment today that's not helping it. Keep an eye on it. I mean, it wouldn't, this has more likelihood to get a dip buy than, a company that's missing here today. So look, if you're already looking to buy the dip, I'd be looking at the companies that actually beat earnings as opposed to the companies that, like a Walmart or a Snap, from the other day that, is a disaster. So
I have a question.
I don't know if I'm necessarily coming in and buying. I'm just saying I wouldn't short it down $3 here.
I have a question here, and maybe Dennis or Joel can take the answer. Now for UPS, how would a recession kind of work for this stock? Would it help or hurt stock, right?
Well, it hurts it for sure. I mean, recession just hurts anything that's, to do. And this is obviously just delivering packages. So recession, people ordering less, it's going to be less. So the recession doesn't help a lot of stocks. We were saying, at a McDonald's is kind of recession proof, but it doesn't really help anything. Just some stocks don't get hit as hard.
Don't get hit as hard.
I think
that's
UPS
what I'm wondering.
and FedEx still get hit hard in a recession. I think a recession is coming. That's why it was just
so
a matter of
really
how much
sensitive.
is priced in.
Okay. All right.
For UPS here, what are you going to do at 185? And that's where you're at right now. You're down 289. You're not bouncing. That's your 4-day low. Well, actually, it's 184.27. So if you're taking a poke here, holds 184.27, boom, you got a chance to rally. Palms out at that close, double close area, 87.91 and 87.98. But you lose that 184.23. I think you're looking at 180 in UPS. Did they say anything about fuel cost at all with those big old gas guzzling trucks? I mean, that has got to be putting a little crimp on earnings. And I don't know. I just look big. Same thing with the market. Big rally, pull back from the high of the move, trying to decide what to do next. It's really, what's the market going to do from here?
Yeah, the market's got the buy the dip mentality going again. So it's in order for the bears to start winning, it's going to take more Walmart type news to break that buy the dip mentality. I mean, Snapchat hit it a little bit. It's one shot. Walmart's a big shot. Again, what's going to really matter is the big four, even if you can throw Meta in there, the big five, but really it's the big four, the Google, the Microsoft, the Apple, and the Amazon on Tuesday and Thursday. And that's going to be, can we take the hits? We get through those, then we're going to be okay. If one of those, I'm going to say it again, if one of those gives a big warning and lowers guidance, it's not going to be good. So I'm scared that one or maybe even two of them, Mitch, I don't think it's going to be four of them, but I mean, that would be a complete disaster. But it's going to be one or two, I think, that might warn, and that's going to be an issue.
All right, guys, let's keep driving through these earnings. Moving on over to General Motors here. Let's talk about their Q2 EPS missing here at $1.14, missing the $1.30 estimate. Sales at $35.76 billion, beating the $34.59 billion estimate. GM, of course, missed on that EPS, a lot of it to do with the supply chain disruptions and 95,000 vehicles still waiting for chips. They have a lot of news out here, so I'm going to go through some of these headlines. GM did say that its battery production starting in August at the Ultium cells. It sees rapid acceleration of EV capacity in North America, plans to produce 400,000 vehicles over the course of 2022 and 2023. They also stated a partnership with Lavient, so you guys can check out that one. General Motors announced a significant multi-year sourcing agreement for Lavient with supplying GM with battery-grade lithium hydroxide. GM also confirmed that it secured battery materials needed to build 1 million EVs a year by 2025. So a lot of news coming out there.
Kramer said it perfectly last night on Mad Money. He's like, GM's going to be a 2023 story, and it is. The EVs are coming. It's a matter of we got to get through a potential recession here. When we get through that recession, GM and Ford are going to be huge buys. I think if you're here, you might be early. I have a little piece of GM. We know I've sold my Ford. I had a bigger piece of GM, and I was like, I'm not comfortable with that position, thinking that we were going in a recession, because in a recession, they're not buying cars. So I just think we got to get through the next 6 months, maybe even a year, depending on how bad this recession is going to be. But you obviously the market's forward looking, so you want to be buying at a certain point in time when you think the coast is starting to get clear. I mean, the recession really hasn't even started yet, though. So I mean, hard to just come in here and say, yeah, let's buy the dip on GM. Maybe it's going to rally here today. There is a little bit of momentum going its way now. It went from 30 to 35. There'll be some dip buyers looking into a stock like this. It's not Walmart, but it is, I don't know. It is affected by a recession. So I'm just going to be sticking with my little small size position in this, not adding to it at this time.
33.20 is your pre-market low, right on the kisser, and that right now it matches your July 19th low at 33.28. You're stepping out of 50 cents away from here if you're buying it here. I don't know what's going to do in 23, but this thing better hold a bid at 34 today. If it holds a bid at 34, then you have your 4-star resistance right in the 35 handle. You don't hold at 34. You can't establish a bid above 34 here. I just don't like the way the chart looks right here between 32 and 34. So that's a look at GM, 117,000, decent volume, down almost 2%. So
let's take a quick look at that partnership. Yep. LTHM, Lavent Corporation, is up on that, and this will affect lithium players. So keep your eyes on that. I think this is, how you just mentioned that GM will be 2023. I don't think that the EV makers will be 2023. What I think is going to be 2023 is going to be charging stations, autonomous plays, and lithium plays.
Yeah, the lithium is not going away. This story is only going to get bigger. I do have a position now.
Yep, long time.
Do you still have yours?
Single digits. Yep.
I've played this one, but I don't have one. But
yeah,
hey,
we're still in it.
Yeah, Gene got me in a couple years ago here. I think $7-8. So I don't know. I saw it up near 35. I'm thinking, whew, wow. And then back 20 is just a rock of Gibraltar. It's trading up on this news today. I'd like to see it close above 24. Had that spike high a couple days ago, gave it back, went down to 22. I like to say for longer term, man, show me you can hold 24 and make your way up towards 25, 26.
So I agree with that. I'll definitely keep watching that one. I was setting some alerts there. We're going to keep watch on those Joe levels, see if they get through there. Let's go ahead. Let's get to our guest time. We're going to go ahead and bring on Ivan Feinseth here. You guys know him. Let's bring him on here. Partner and CIO of Tigress Financial Partners. Welcome back, Ivan.
Thank you. Good to see you guys. Thanks for having me on.
So, Ivan, get us, we're here. We got you here for the pep talk. You did a pretty good job last time, right? We had you on a little over a month ago. You were telling us to hang in the trenches, buy the dip. We bought the dip. We're back up now and teetering up here at 4,000. Why don't you give us your top-down view here? Just starting out with Q2 earnings season.
We got this confluence of events this week. If we got the big four, I'm going to say big five, including Meta. I'm going to add Meta into that. Results out, and if we don't get any significant disappointment or negative guidance, if we get this trend of not as bad as feared, I'm going to say that supports that the bottom is in and that the trend is going to move higher. Then we got the Fed. I believe they raised the Fed funds rate 75 basis points tomorrow, and that puts it at 250. That's where it was during 2018-19 when the economy was doing well and the market was doing well. And I think that we've already seen a big drop in oil prices, a big drop in industrial commodity prices. There are a lot of anecdotal evidence, data points that point to a potential peak inflation, this peak Fed. I think that the 75 basis point move gives the Fed enough room to say for Powell, if he indicates in any way that he's shifting to a more data-driven view, and that indicates a Fed pause, that he doesn't have to be as aggressive, that what he's done so far has worked. And then on Thursday, if GDP is not negative, the indication is or the expectations are plus 0.5%, which then negates the traditional definition of a recession, which would be two back-to-back declining quarters. So it would reverse the Q1 1.6 decline. So things aren't great, but they're not as bad as everybody is fearing. And again, this whole inflation thing was not a demand issue. It's purely a supply issue that was caused by the pandemic. If we never had the pandemic, we would have never been in this situation where we had factories that were closed for months and breaks in supply chains and the backups of the ships and the containers at the ports. And that was Fed Chair Powell's theory that eventually the goods would start to flow again, and this inflationary pressure that we were seeing early on would have been transitory, and unfortunately it became more persistent than transitory, and then he was caught with having to catch up and dramatically increase rates. But I still think overall Powell is one of my favorite, I think one of the best Fed governors, and if anybody can engineer a soft landing, he's the guy who can do it.
Are you worried about tensions with China? I mean, that would disrupt the supply chain to another level. I mean, there's political tensions here that seem to be just growing. Kind of scares me a little bit, just as an overall market investor. Are you worried about China at all?
Always. I mean, first of all, the lesson learned here of the pandemic is that we never should have had such a China-dependent supply chain. And I personally, not to get too crazy politically, but I believe that China egged on Putin to go into Ukraine to get a sense of what the world's view would have been if China pushes up on Taiwan. And we all know Taiwan Semiconductor makes everybody's chips. Most companies, Apple, Nvidia, Qualcomm, they are all fabless, and they rely on Taiwan Semiconductor to make their chips. And if China were to get control of the world's chip supply, we already see what the issue is with this shortage of chips and the supply of chips. So we really got to get the chips bill here passed so we can invest significantly in production here. And in fact, Nvidia and Qualcomm, and there's even been some indication that Apple would talk to Intel again about using their foundry capacity to manufacture chips here. So we need to have a US-based semiconductor supply chain.
Who's going to be the big winner when this chips bill, which I believe is going to get passed, and it looks like this week? Who is it? Intel is going to be the big winner. Who's going to be the big winner here?
My two favorites here are Intel and Applied Material. But everybody, you know what I mean? And I've seen one analyst say, oh, well, Taiwan Semiconductor is already at like $6 a wafer and Intel is at 10 and Taiwan's going from 6 down to 3. It's not about the price of production. It's about the total cost of production and the security of production. So I think that America is a great country and we are the world's innovator. And I believe that having the foundry capacity here we should be the world's chip supplier. We are the world's chips creator. And so all of the great leading chip companies, Qorvo, Skyworks, Qualcomm, I think they will all benefit from this.
We're on the line with Ivan Feinseth from Tigress Capital Partners. Ivan, one thing that I've been keeping an eye on, as far as this recession, non-recession talk, has been unemployment. And jobless claims took a little jump to the 250K level last week. Does that have you concerned at all?
Well, I don't want to say I'm concerned. I think it's also really hard to have a protracted or deep or any type of recession with the employment level that we have here. And while we've seen across the board a lot of big companies cutting that, they're not cutting positions, they're cutting back on their rate of hiring, which is just prudent in some uncertainty. They're being a little more cautious. But selfishly, the data, the uptick in data also, we want a Fed pause. We don't want this aggressive action from the Fed being accused of being behind the curve and having to catch up. So any moderation in employment trends is going to give some pause to the Fed being too aggressive, because the other fear in the market is that there's a major Fed policy mistake and if the Fed raises rates into a economic slowdown, which is just creating more of a disaster. So employment data is important. A slight uptick to where it is, even touching the 250, I don't think is a major cause for concern.
One of the biggest reports that I'm going to be watching is, of course, Google tonight. What do you feel about this report going into it? I know the chart doesn't look the best, but how do you see this, Ivan?
Well, long term, I still love Google. They are on the forefront of every major secular technology trend, online advertising, mobile, cloud. I mean, it just goes on and on, everything they do. And if they actually confirm that they're not seeing the advertising trends that caused the issue out of Snap last week, which caused the sell-off in Meta and Google, if it is, and I think it's more specific to Snap, then they give the all clear. You're going to see a big rally in Google, a big rally in the market, and especially in the NASDAQ and across the tech sector. And then if Meta also confirms that, again, I think that we're going to see that this fear that has this cloud of fear that has been overhanging the market. And I believe we have seen the bottom in the S&P that was made on June 17th. So I just think that it will just accelerate the recovery. It's not going to be a massive V-shaped recovery like we saw in March of 2020, but I think it will accelerate the upward ascent of stocks.
Ivan, we saw you in the background there when we were talking about the retail apocalypse, what's going on today. With Walmart, you're having, you lay out your bullish thesis here. When you see something like that, and you see that the retail side, they're just getting flushed, does that put any kinks in your thesis, or are we just technology?
Well, I say technology moves the world forward, but also the consumer moves the market and the economy forward. And one of the biggest bullish talking points has been the resiliency of the consumer. So we don't want to see anything that would jeopardize that key bullish trend or talking point. Now, unfortunately, Walmart's core consumer base tends to be a little bit more economically sensitive to increases in gasoline prices and food prices. But I have been neutral on Walmart for some time. And I think that the weakness that's caused in Walmart that's Walmart is causing in retail is it causing a buying opportunity in Costco and Target. So as far as general merchandise goes, Costco and Target are my two favorite. Target continues to invest in delivery and distribution capabilities because, I mean, one thing that makes Amazon a big winner and gets me every time is when I'm on Amazon and I'm looking at something and it says, if you click now, you can have it for tomorrow. That's powerful. And I know that Target wants to move more and more in that direction of fulfillment. And I think that that Target and Costco are focusing on that part of consumer where Walmart, is based on their value proposition and just everyday low prices to attract very cost conscious and economically sensitive consumers.
Well, thank you like always for joining us today, Ivan Feinseth. You guys can check him out on Twitter, partner and CIO of Tigress Financial Partners. We'll have you back on, Ivan.
Thank you. Always great to be on. Great to see you.
Have a great morning.
Thanks,
Amazon tidbit for you here. Okay, so I bought, when I go on vacation, like I always buy a book, right? I couldn't find the book I wanted, and so I ended up ordering it online, and I had to get a couple books, but I got a Willie Horton book, right? Did you know that, Dennis? Willie Horton put a book out, or
No.
And so I got it, and then we had some birthdays, Lisa's brothers, and Lisa was like, I'm giving one to one. I'm giving a book to Daniel. I want to give one to Larry too. Can I give him your book? And I'm like, sure. This was Sunday at 4:00. And I'm like, just make sure you get me, another one, because I definitely want to read the book. The book from Amazon was here yesterday at noon.
It's crazy. I know they're incredible the way they can deliver.
Yeah. So I'm bullish. Down $5. I don't know. It was just amazing service, but
it is amazing service. We've got breaking news here.
What do we got?
When Ivan was on, Shopify is cutting jobs. Shopify was already down significantly on the Walmart warning. It is going to get a lot uglier for Shopify. Reading from the Wall Street Journal piece, which is in the Pro here now. Shopify to lay off 1,000 workers or 10% of its employees. The CEO says job cuts across units, including sales and recruiting. He says he was wrong that the pandemic e-commerce boom would last. This is awful to say.
This is
when you've got a company trading 70 or 80 times earnings. I would not buy this dip on Shopify. This is not good news.
Yeah, this is really not good news. And I mean, we've talked about soft landings, right? And that has a lot to do with the job market staying strong. What do we continue to see in the headlines is not the job market continuing to stay strong. It's a forward look, but definitely what we've been seeing in the headlines doesn't look good.
This is not good either. So you're just getting too many warnings here now. And if you guys, and I've been bullish here for the last few weeks here, I'd want to be market neutral at this point in time going in. We're getting too many Shopify is not even reporting until Wednesday.
Supposed to report.
They're pre-warning here a day before. I don't know why they didn't wait till the day of, but they're obviously not going to have a good report here either. So, you're getting ahead here. Bring up the chart here, Joel. I mean, you have great support at $30, but Katie barred the door. I think it's going to test that 30. I think if you're at 32, you're early. I think it's going to test the 30, and I wouldn't be surprised if it takes it out. 10%.
10% of the workforce. I mean, it's so funny because we just brought this up with Ivan, with the employment situation. But once again, and I'm just going to go back to this again. I mean, here we are, 2 years coming out of the pandemic. All these companies that were thrust into the spotlight, and it ain't continuing. This is another just hit under $32. There was a ton of support here at 30. Like I said, you're stepping out here at 32. Boom, this thing was at 40 a couple days ago. All these charts, man, just looking the same. A rally off the bottom, and now they're like they're rolling over. So they hit the S&Ps on that. They were trying to hang it
because now you're hitting tech.
Now you're hitting Amazon. And you're hitting Melly.
Well, Amazon
what's the other?
But
what's the other
you're hitting tech
Dennis?
all together now. It's like, boom. So this is the problem, is that the news flow is just too negative. It's too negative to stay bullish here. So, and that's why, I've turned, we topped out right at the 4,000. We got to the 4,000. I started doing some hedging yesterday because I was nervous going into these reports. But now we're getting pre-earnings warning from Walmart, Shopify cutting jobs. They weren't even on the schedule. Yeah, Microsoft and Google coming tonight. Hopefully they can say something okay, and maybe that can try to hold us up. They've got to turn it around for us, though. Tesla did a fine job. Netflix was okay. Again, if you start seeing some of the majors here with warnings, and again, I'm still nervous because Microsoft, there was the report, it wasn't confirmed by the company that they were going to slow hiring. I mean, there's problems here that are dictating that, are we going into a recession or are we in a recession?
Boy, this is one of the most bearish shows we've had in a
there's
long
another thing.
time.
I don't want to bring some more negative, but remember, another thing that I've been focusing on is the Fed and quantitative tightening, right? The selling of the assets. Beginning September 1st, we're supposed to rise that to 60 billion from 35 billion, and it could be as high off as 95 billion. I think this is something that we should watch for on Wednesday. What gets talked about the selling of the assets? This was supposed to start September 1st, where you got the increase from the 30 billion that was supposed to start on June 1st. So this is another thing that I think that a lot of people are talking about interest rates, but not many people are talking about that increase in the cap for the selling of the assets.
Yeah, another thing to be looking for with Powell is, he's gone, through these Q&As and stuff like, oh, the economy's still looking strong, we're still okay. Well,
now we'll see if he can say that this time.
Yeah, I mean, I don't the numbers.
Lots of information coming our way. We're going to have a clearer picture at the end of this week. So far, not so good. We'll say that much. But lots, maybe Google and Microsoft say, hey, it's going pretty good. Maybe, Meta gets over that lower bar that was just set by Snapchat. Maybe an Apple, Amazon say, hey, it's okay. As long as it's okay, they'll continue to buy stocks. But, I mean, so far, I'm scared that one of them's not going to say it's okay. Shopify just said it's not okay.
A lot of stocks continuing to fall off that Shop.
Amazon.
What are the relationships that are closest to Shop for us, Dennis?
Well, Amazon, but just online, anything to do. But that was already getting hit because of Walmart. Shopify was already down 5%. Joel, from last night, Shopify was already trading down at 35 because of Walmart, and then it comes out with its own warning on top of it. So, I mean, it's your online shopper. I mean, I'm sure Chewy's probably getting hit harder on this. Yes, it is. It's fallen another $1 on this. But you think about, Shopify is your business that gets smaller companies online. So, I mean, it's the online shopper indicator. So all of a sudden, and obviously maybe this is just a Shopify problem. Maybe it was a lot of pull forward, when we're all closed up, everybody's trying to get online and now everybody's online. So that business might slow. That kind of makes sense too. That whole thing, there's a lot of pull forward probably with Shopify, and now that's coming off. It's sometimes something like a Zoom almost, but Shopify is not Zoom. But in a similar way, it was so much earnings pulled forward and so much revenue pulled forward that now it's going to slow for them, and that's probably a big piece of the puzzle there. But again, the market's not going to look into it that deeply. It's just going to say, hey, we're hitting Shopify, we're going to hit everything that's selling stuff online. And Amazon would get hit on this, but Amazon was already getting hit off Walmart. So maybe Amazon falls a little bit further. I think Amazon's down another $1. But think about your online retailers. They get hit directly when Shopify
Etsy down 7%.
There you go, Joel.
Man, look at that. I mean,
ouch.
Yeah, that was holding up okay. And then
do you PayPal Square? And full disclosure, I do have the little long position in Square. Maybe I should have sold that last week when I got 20% in 5 days. I guess you got to take the money and run because all of a sudden half my gain is gone.
Yeah, this market is it's hard to be the one to hold the gains in this type of market and not just run towards the profit.
Chat's all over it. Overstock, another one. Think about they were already down on Walmart. Now it's a direct hit to online because of Shopify. So it's going to be an ugly day for anything to do with retail, online, brick and mortar. It's all getting hit today. We get warnings from both.
Yeah, that's it's just going to be the retail disaster on out there. We'll continue to watch. Let's go to General Electric. Let's try to get this one in here. It actually is up right now. You take a look.
They got to buy something.
Yeah, something got to get it up. General Electric here coming in, EPS beating at 78 cents, beating the 38-cent estimate. Sales at 18.64 billion, beating the 17.60 billion estimate. Q2 free cash fell to positive 162 million from 199 million, but beat the consensus outlook for negative 806 million.
It's a beat. It's a nice bump up in the price of the stock. Hard to buy stuff right now when it's getting ugly here, though. So, could this one get bought? I think there's room in the mid 70s. It was another stock that was oversold. The earnings were pretty good, so it gets through. It's not directly impacted, from a Walmart, so that helps it as well. I don't know. What are you saying, Joel? It's not much on the technicals.
I know. Good thing they did that reverse split. But let's see if we can get over the pre-market high. You have faded off the pre-market high of 72.50. And what does it? I mean, I would just have to give a sell zone from 72.50 all the way up to 73. If in fact it could regain that. If it can't, things are I mean, who's going to be stepping out to buy this thing at, up $3? Top, will it see the top of yesterday's range? Maybe not today, 68.93, but very important for the spoos to get a move, a hold on, get a rally, and for this to take out the pre-market high. But just we haven't talked about this in a while, but this thing's gotten absolutely annihilated after that 1-for-8 reverse split, peaked at 116.17, and man, almost a 2-for-1. Yeah, it was practically a 2-for-1 stock split when they hit $60 the other
quietly, because nobody talks about GE anymore. So just the sneaky little like 30-40 point sell off in 2022. $100 starts the year 2022 around $100. It's down to 60. It's hammered too. A lot of stocks. Hasn't been a lot of places to hide in 2022. Cash has been pretty good. There's been a few, safety spots, oil in the first part of it, but that's got hit eventually too. Eventually, they kind of came for everything. If you were a long only, you're struggling in 2022.
Well, I was wondering, is maybe Coca-Cola somewhere where you could be looking to hide today? Coca-Cola's earnings coming in here, EPS beating here at 70 cents, beating the 67-cent estimate. Sales at 11.3, beating the 10.54 billion estimate. Updated full-year guidance sees full-year revenue growth 12 to 13%, getting a little lift in the pre-market. Is this an area where you could be looking today?
Good enough is what they're looking for in this earnings season. Good enough. Show me a beat. Show me no lowered guidance. Show me no, commentary where you're, seeing anything soft. I mean, this is, why the stock's trading up so far, at least. So, I mean, this earnings season, the bar is very low for a lot of companies. And obviously with the Walmart disaster yesterday, it's like, just don't say anything bad, Coke. Just don't say anything bad. And so far, so good. I don't think they've had the conference call. Maybe they've had. Maybe it's going on right now. But so far, so good. Holding up. They can't sell everything because the S&Ps aren't hammered enough. So Coke is so far a place to hide, at least for this morning.
You stuck over 63 and you're hanging a bid here. Some would like it at 62.80, but 63, that's an important area. Two highs, not last week. This actually peaked way ahead of the market, but got to get rid of that 63 seller. Two highs in that area. Bid there for now. I'd be careful on this one where they scoop up the paper at like 63 and it goes like to 63.10 and you're like, yeah, I'm looking good now. And then they come and clamp it back down at 63. So I don't know. Not too many times I've probably made money buying Coke up 71 cents, but give it a try.
All right. Let me sneak one more in here. Archer Daniels Midland. Reason why I'm pointing this one out is that at least it's a positive stock, right?
We're looking for positive things.
I'm trying to end the show on a positive here. ADM food. It's a farm product stock, right? And this is up. Q2 EPS came in at $2.15, beating the $1.71 estimate. Sales at $27.28 billion, beating the $25.16 billion estimate. And you can see it up pretty decent today.
It's a nice lift. I'm just scared there's sell the rip mentality in a lot of this stuff because
80.
people are spooked on the overall market. So it's hard to chase. We're still in a bear market. Sell the rip has still trumped all strategies pretty much in 2022. They sometimes get some follow through, sometimes it goes up a little bit, but it seems like eventually the sell the rippers seem to make money. So I'm not chasing. $80 big psychological level just because it's a big whole number. It's hard to tell, if this is going to turn around or not. But I just can't chase anything in this.
Yeah, 80 to 81. 80 to 81. These had the highs.
Wow, we're falling hard here right now,
Joel. Oh, something else must have come out. What happened?
We just dropped another 7 points here in about 7 seconds.
We just
something
got
happened at 9 o'clock. Somebody else say something?
Case Shiller National Home Index.
The home index coming in and shaking things up.
Up 19.
Yeah, that's the Case Shiller's home price index that was going to hit at 9 a.m. Eastern.
There's a lot of news that just hit at 9. I'm trying to look through it all just to see. So you got that. There's like 25 headlines.
That didn't look like
9 o'clock.
Holy man, 9 o'clock rocks. Okay, all right.
So we just bounced it back up. We're chopping around here now. We get a rip up into the mid 394s. I'm a seller.
All right, well, definitely
from a day trading perspective. We're chopping.
What a
around,
fun day! What a
come
fun
up a little bit more and give me an opportunity to sell some SPY, and I'll do it.
Got to take a deep breath in this market, but definitely smash the like if you guys enjoyed us getting through all the things that we got through today. We talked a lot about what's going on in retail. We caught that chop, hit the tape. Thanks to Dennis. Appreciate you, Dennis. And like always, we're going to keep battling here. If you guys want to look at some more tickers, where should you go? Well, Joel Alconin will be covering some on PreMarket Prep Plus. Check that on out. You got any guests today, Joel? Any guests?
No guests today. We're just going to
even better.
All these movers. So, all right, we'll check in with you guys in a little bit.
Boom. Joel's on out. Dennis, you go do what you got to do.
Yeah.
Hey. This one's isn't an easy day.
Give me some rips to sell. I'm nervous. That's all I'll say is I'm nervous going into tonight, folks. I'm nervous. Hopefully I'm wrong.
All right. We'll definitely keep watch like always, guys. Up next, you guys got live trading with Lord Ryan, Zunaid, and I. We're going to continue going here on Benzinga. Have a great day. Like always, keep an eye out on what's going out and stay tuned. Today, after the bell, we'll be putting those earnings reports right here on Benzinga. You guys can catch at 5 p.m. Google's earnings call. And then at 5:30, we'll be getting into Microsoft's earnings call. So stick around right here on Benzinga. We got it for you guys. Hit the comments after the show. Tell me what you guys are liking about PreMarket Prep, the way we're doing it. Do you want to see something change? We're always here for you guys. Smash the thumbs on up because it supports us and lets us know that, hey, you guys want to keep PreMarket Prep right here every single day for free. Hit the like before you get on out of here, and I'll see you guys, like always, on live trading. Let's keep battling. This market ain't easy.